Okay, welcome everybody to this evening's webinar. Tonight's webinar, first up, is a review of the recent Forex trading patterns. So what I do is just go have a look at last month's trading over a number of pairs and what patterns can we see retrospectively. What can you learn for the next time that you see that pattern coming up? Or it could be just purely trading support and resistance. We'll have a look at what the market did present last month. What can you learn? And take that forward within your trading. All right, after this webinar tonight, we also have another webinar, the Quick Start webinar. So if you're brand new to trading and you don't have a strategy and you want to get going, you can come along and have a look at the Quick Start strategy. Nathan will set you up, but I'll be talking about trend. Nathan will talk about the strategy. And if you're new, this is a great way of just getting comfortable with starting to trade in a demo account and then looking to learn more about trading. And then tomorrow, we have another webinar at 7 p.m, live Forex market review, looking at the market, see what's going on the live charts. So we'll get straight into tonight's webinar. I will need to finish around about 10:02. So I've got a number of pairs I want to look at tonight. So before we do that, if you can read through the risk disclaimer, that'd be great, everybody. Any questions to the chat box or the question and answer box. So please have a read through. So I'm going to be reviewing what the market did. And of course, it's always easy retrospectively, but the more that you can make hindsight, your foresight, when you're trading, you're going to hopefully start to see, okay, I maybe saw that happen last month or the month before. And from that, a certain price movement occurred. So the more you see certain things, you can anticipate maybe price is going to do something from that pattern. And while you're reading through that, it is worth knowing that the market is definitely a little more range bound than it has been. July, August time can get range bound, especially August, because it's the holiday season in the Northern Hemisphere as well. So we're most definitely seeing a little bit of range bound nature right now. All right, let's move along. So if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities. And I've been trading the Forex market now for more than 15 years and mentoring for more than 10. If you want to contact me about anything to do with webinars, you can just send me an email to duncan.cooper@acy.com. And through the week, you can connect with me at our website. Go to acy.com, go to the market news tab, you'll find my analysis there. On our YouTube channel, ACY Securities Australia. Or you can connect with me on Twitter and LinkedIn. Those are my handles. Azu, hello to you. As well, we got our Telegram channel where we put our analysis through. So if you want to connect in there, then contact Nathan and he will set you up as well. If you want access to my chartlets and templates, the ones I'm using tonight, just contact Nathan. He will organize setting it up for you. So I'll put his details in the chat now. There we go. If you want to get access to the Quick Start webinar, I will give you the link later, but you can just go to the webinar page on our website to get access to the Quick Start webinar at 8 o'clock tonight. But I'll drop the link in there at the end. All right, so let's just get to the charts. Any questions, just shout up. So I'm just going to go to my blank price action charts. And I've got, depending on the time, I've got here 7 pairs that I reviewed this afternoon, quietly to myself. All right, now I'm actually just going to make sure this is all blank first of all, and just show you where the start of the month was. Start of the month started just there. All right, and I'm just going to drop down to the monthly chart to, this is where the new month started. And I actually said this at the start of the month and the previous month, that potentially we could come up and fail here. And maybe we could form some form of head and shoulder pattern on the monthly chart. Now, forming a head and shoulder pattern on the monthly chart is going to be slow going, but if it's going to be a head and shoulder pattern on the monthly chart, for this to then move down long term, it's going to take some time, but came up to an area of resistance, known level, 96.87. held the previous month, and then this is the month that we're discussing tonight. Last month, we obviously had a negative month. And let's get rid of that line so we can see the month. We actually traded down and traded back up within the month. But we started up here and came back up to retest this area. All right, to the weekly chart. There was the retest up in that zone just there. And we'll have a look there on the day chart. All right, so this is where we get the retest on the day chart. The new month starts just there. Now, of course, I'm just going to go through a number of pairs tonight, show you how I can look, how I would look back. I'm just doing top-down analysis, looking at structure, what kind of patterns are forming. Of course, you can do this yourself, but as you're learning, you should be able to, as you move forward, start to do this yourself and hopefully learn on your own. But what I noticed just a couple of days into the new month is at that resistance area, we form this double top just underneath it. We come up and potentially forming a double top, and we get this negative candle just here. Now, I'll often drop down to a lower time frame to enter, but one of the things that I maybe want to just get across to you is that you can be just entering on the day charts, using the candle of the day chart, breaking the low of the candle on the day chart can be an entry point to get in. And I'm going to show you a number of those examples tonight, just basing on the day chart. Of course, you can be looking on a lower time frame to get in. Sometimes a lower time frame doesn't really present an opportunity, but simply this pair, for me, a double top. Price projection is the height of the pattern. So go down to the low where we move back up to create a double top. Draw the fib across the range, and the 200% marker, which is here, is the profit target. All right, so we'll be looking up here for an entry. Okay, now I might just move that to the 4-hour chart. Now what I see here on the 4-hour chart is it starts to sell off and it doesn't retrace back up to a 62% level or a 79% level, but continues to trade down. So that's why I'm saying if you can't get a retracement style entry, so retracement style entry is when price drops down, then retraces back up and offers you maybe a 79% retracement. You can sell on the retracement. Doesn't really present that way here. So if you were waiting and looking for that, it would present. But if you were just watching the day chart and seeing the reversal this day here, your entry could just be the break of that negative day. So as price breaks the low, you short, you sell. So that's the level to sell at. And you put your stop above the double top high here. And your target is the 200% marker. Now, it doesn't always make the 200% marker, but in this case, it quite clearly does. All right, so there was a little double top forming at fractionally below the monthly resistance level where that higher time frame head and shoulder pattern may be forming for the long term. All right. Now, the next thing I want to point out is when you get a double top form, this is quite a small double top, but it does run down to its target, is then often what will happen once that's formed a clear downtrend, whilst there's an actual swing in here, and we may think this is in an uptrend, and it isn't an uptrend on the day chart. If I drop to the weekly chart in this area, this rally up here is just a rally on the weekly chart before we have that nasty drop last week. Okay. And the thing I want to point out is, I'll just go back to the day chart because it's just a little bit easier to draw a fib on this range, is you get a double top drop, will often then get a retrace and then back up when you're dealing with double tops to like a 62% retracement or a 79% retracement. And what you'll find here is we retrace back up in between the 62 to the 79% level. So that's just wanted to point out is quite often after a double top drop, we'll rally back up to 62 to 79 and then have another drop, as you can see there. All right. And we just exceed the 127 extension there. All right. So a couple of patterns there. Primarily, what I'm showing you here is this double top. And what I would primarily be looking for as well with that rally, there's the drop, drawing the fib across that drop from the double top. I would generally be looking for a 79% retracement to look to sell there with a stop above here. Now, in this case, it doesn't present that, but you know, what I would be looking for as this is moving up would be that kind of affair. All right, so double top, drop, and then look for your 79% retracement. In this case, it doesn't quite get there, but it's always good to review to see what price did and what would you, in normal circumstances, maybe be looking for. All right, so that's the Aussie yen. Primarily, with a nice double top here and a very good drop, and it all came from the higher time frames, or the highest time frame really is this potential failure here. And in a long term at the moment, we had a very strong rally last week at the end of last week, back up, but maybe we're still going to be declining for the new month and further months to come if this head and shoulder pattern here comes to fruition, because we also are as well potentially maybe coming up from a lower bottom and really failing at a 79% retracement here, maybe for a long-term decline this way. It's a little bit difficult with the big rejection that we got last week, but maybe that's the long-term pattern that we're seeing there on the Aussie yen. I got a question, Edwin. So if you missed the day candle entry, wait for a retracement for another opportunity to enter. Yeah, if it comes, I mean, on the day chart here, as I was saying here, if you're just taking the day chart entry, there is your entry. Doesn't really retrace within this move down. The next retracement is, of course, up this way. You could be looking for a retracement on the 4-hour chart, but I don't think in this example here, it never gives a retracement in the early phase of the move. So sometimes it doesn't, but yeah, I mean, look for a retracement on the 4-hour chart if it offers you a very nice one, because of course you've got the target of the double top. But it's always great to be getting in the early phase of the move down, rather than, you know, trying to, you know, selling down here, even though maybe you could sell down here on retracement. Most of the move has already occurred because your target's the 200% level. So trying to sell a retracement in the early phase would be the key. All right. Next pair, I want to talk about the Aussie dollar, which is rather range bound. And Edwin, you've got another thing coming. In terms of stop loss, how much risk will you be looking at entering on the daily? Well, you're going to be risking more pips, but it's not necessarily risking any more of your capital percentage, because in this equation here, here's that double top again for our chart look. The day chart candle. So day chart candle was approximately, let's just call it 80 pips high. May have had to risk around about 85 pips approximately, let's call it. All right, so if you're more used to, say, risking 40 pips, well, you're just going to have to halve your lot size if you're entering off a day chart entry. All right, so you can still risk the same amount of percentage of your account. You're just going to have a larger stop in terms of pips and reduce your lot size, okay? But even taking an entry there off the day chart, that would be a nice profitable trade in terms of results, even if you're entering using an 85 pip stop, because it moves down to the target. There's approximately 260 pips. All right, so that's a risk reward of at least 1 to 3. All right, so if you're risking 1% of your account, that's a 3% gain, 2% risk, 6% gain. All right. Of course, it's always nice to have that smaller pip risk, to maximize the risk reward. But having said that, you know, I would take that trade every month if it was going to give me that kind of, you know, risk reward and result. All right, let's move over to the Aussie dollar. Now, where are the range bounds? This is where the start of the month was. Now, I actually put this out on Telegram, this retracement down in this area, looking for an opportunity to trade down here close to support. All right, so the area I'm looking at for the first trade was down in this area. I just want to go to the weekly chart. And I was looking in this area because the month before we moved up to a higher top, and I was looking for this higher bottom to form down here. So onto the day chart, back to it. We came up, and what I was looking at with this weekly move up here was the fact that we came down to the 62% area. All right. And we're a little bit short of what was weekly support down here. But in any event, it pulled back to an area where I would expect maybe that a higher bottom on the weekly chart could form. All right, so I was looking at this moving up and then pulling back to form maybe a higher bottom here to move up this way. So if you draw a fib across this little range here, and then we'll drop to the 4-hour chart, what you'll see, let me just get this fib perfectly drawn, is price moves down here. And you could have been looking for, I'm going to get rid of that big fib so we can just see the small fib. You could have been looking for simply a pullback to the 79% level to buy, stop below the low, to look for the move up. Now, that would have worked fine. It would have almost taken you out because it almost came down and tested the low, but there was a 79% retracement in here that you could have traded with the idea that, you know, from a day chart perspective, this was bottoming out, maybe putting in the higher bottom on the weekly chart for the next move up. So the thing that really got my focus in this area was the month before, to the weekly chart, back to the weekly chart, we had this false breakdown here and an impulsive move up to a higher top. So then I was looking at the 62% retracement in here for the potential for then this to move up. Now I was thinking this would potentially move upward like so that we have approximately a 62% retracement and then a move up to the 127 extension. Now we never moved up to the 127 extension. We end up failing up here. However, the trade I'm talking about would have still offered you a very nice result, taking that 79% pullback. Now in the same area, if you wanted to wait for some confirmation, so the first trade using the fib 79% was this range here. There's the 79% level there. Now, if you wanted to wait for confirmation for this to hold here and then start to move up, what happens is we put in a higher bottom here and we move up to a higher top. So you could look at this 4-hour range for a 79% retracement. There's the 79%. So buying at 66.36, it doesn't take out the low. It almost does. Like this one almost took out the low too. But it doesn't take out the low. And then you can see price starts to move up. And if you're able to hold the trade with anticipation that we're going to get that weekly long-term move up, then of course this moves up very nicely. All right, so there was two 79% retracements there. However, you may be wanting to look at the market. All right, and there was actually then following, there was another impulsive move up here. This is just a 62% pullback. But what I want to just get across to you is that once the trend starts to unfold in the day chart, you're going to see these retracements on the 4-hour chart. Sometimes it's a 62% level, sometimes it's 79. I'm generally focusing on the 79. So this 62 for me, I would miss out, but it's just showing you, I just want to as well get across to you that looking at what price has done, it's going to do the same thing time and time again on the charts. So, you know, instilling into what price does, it moves up with the trends and then it pulls back. I'm usually focused on a 79% pullback because it offers you a better risk reward for then the next impulsive move up. All right. So we moved up back to the day chart. So I was looking for this. There's the weekly run up, pull back. I was looking for this to potentially move up to there, but we obviously top out here. Now, potentially, and I haven't discussed this last month, but, you know, retrospectively, maybe I should have done, potentially this could be a double top. We've actually broken the midpoint there. All right. I was more focused on this being a very strong move up with the weekly trends changing and expecting maybe we're going to get some kind of follow through and hold to that actual trend. But in actual event, potentially now, that could be a double top there. And today we've traded below this point here. So there is the potential that, oh, of course, this is in hindsight, but again, a day chart entry for the double top would be a break of that candle just there. All right. Double top target at the moment. If this is a double top, it's obviously still running out. It's breaking the midpoint. The double top target's down here at 62.91. All right. So we'll have to wait and see whether if this candle rejects 65.95 and gives you a rejection candle here, maybe then we're not moving further down. If we get of course, a very strong close down today, we start to hold below 65.95, then we could be moving down to the double top target. All right. Now, with that double top, there have been some retracements within this movement down at the moment. So let's just have a look at those. And we'll drop to the 4-hour chart. I just wanted to see, we'll see there was no retracement here that you could trade on the 4-hour chart. That's why I wanted to also just discuss how you can enter off a day chart, because if there's no retracement occurring on the 4-hour chart, when you start to see price fail here, then how do you get in? So there was a day chart entry just there, breaking that rejection candle to trade down. Now, a very clear area of resistance that the market's been toying with over the course of the year is 68.05 and 68.18. So this is a weekly resistance area. So if we just drop it back to the weekly chart, all right, those two highs there. So of course that was a false break. We fell back down. However, we have another false break. Now, when I was reviewing what happened the month before, last month, this area was very prominent to trade down from. This area just here, I discussed it last month. All right, opportunities to trade on the tops of those two high days at 68.05. Those two highs pretty much fell at 68.05 at your weekly resistance level. Now this month, as we fell back below, we didn't stop necessarily at that level this time here. All right, but that rally up through there was, you know, a 62% retracement. I'm normally looking for the 79% level. All right. So if I was looking for the 79% level, I would miss out. If you were looking at the 62 level, you could have been selling there. If you sold after the double top, started to fall down, this rally comes up, selling at 62, stop above the high, that would be profitable for you right now. Now, we get this drop down. So we drop back below the 68.05.18 level. So we try to move above, it's another false breakdown. So last, I think Thursday, I was discussing this 79% retracement. Was it going to hold at the 79% to move down? And also, you know, felt this resistance, weekly resistance area at 68.05 to 68.18. So of course you can see there, we come up to the 79% level, you know, selling the 79% level, stop above the high, trades down to 127 extension. Now you could have been selling there with maybe the idea that a double top is forming up here to hold the position. And if you were doing that, well, of course, this is looking very nice. So we fall down. Just to map, you know, how things have been moving. We get a 62% retracement there. So this is a 79% retracement to there before we move down to the 162 extension. And then I just want to get rid of that fib. We move down to there. And then we rally. Again, I would potentially be looking for the 79% retracement, but that doesn't come. If though you're focusing on the 62% level, that doesn't come either. All right, I would normally be looking up here because it's always better risk reward. All right, but what I would just want to, you know, go over what's been happening. Sometimes you'll miss out, but just to, you know, show you what's been happening structurally as we've been unfolding down this way. Now I have been watching this level over here, weekly support, to be support this week, but at the moment it's not holding and it's looking like it's breaking down and through. Now this isn't where you want to sell though, because if we're looking at the fib structure, this is the 127 extension. That's the target now for this rally that occurred there. But hopefully you can see there, you know, looking back in hindsight, what price has been doing there. Maybe we formed a double top up here. The best entry in terms of just a pattern there was this pattern here. We drop back below the resistance area and reject it. Come back up, 79%. That was a really good area to be looking for a seller to sell down last week. All right. But what I want to get across to you is once it kicks into a trend, you're going to see these trend moves down, rally, trend moves down, rally, trend moves down, rally, trend move down. And, you know, we're at the 127 extension at the moment. That's not where you want to be selling. Like I showed with this 79% retracement. 79% retracement. We move down to the 162. That's not where you want to sell, because it will correct back up. When it's down at such deep levels, it's going to correct back up. So if you learn anything from price action from last month, is there's a place to sell and there's a place to take your profit. This is where you take profit if you're short, because it's going to rally back up to approximately 62 or 79% level before then having another drop down. All right, so again, this isn't really where you want to be selling. There's a very high chance at the moment, as I've been proving here, this is now going to rally up before having a further drop. All right, so looking across that Aussie last month, it's rather range bound. Did offer a few 79% retracement levels to trade from. All right, I'll just take all that off and move to the next pair. All right, now we'll look at the euro yen. And this is quite obvious in hindsight. Psychologically, though, when the market was unfolding last month, we had severe yen weakness, and the euro yen, for example, was screaming up on the data chart. So then it becomes very difficult psychologically, maybe, to go, okay, should I sell if I see maybe the opportunity to sell? So I don't know if anybody did sell, but again, you know, the common theme tonight, looking back at last month, is let's just go through the time frames. This is clearly in a strong uptrend here in the monthly. That's why I said, you know, with it being so strong up. So in June, we're very strong up, but July, it could not trade above the June high. Very difficult to get your mindset to think I should be shorting now after a very strong month up. Now the day chart does present with a double top, kind of triple top area. Whether or not you've got the cycle, you know, you've psychologically been able to shift from looking at the yen being very weak to trading down. But let's just go through the time frames. Weekly trend is still up potentially here. At the time, while the trade sets up, this weekly trend is still up. There's a higher bottom here to moving up to test the top here. And I was anticipating this was going to move up and through, but clearly it doesn't. But the monthly and the weekly trends are quite, you know, clearly strong. That's why I'm saying it's difficult to maybe get your mindset to get ready to go short. But on the day chart up here, you know, you can see that we form a very little minor double top to trade down. And we come up and form another double top or a triple top here. All right, now, again, if I draw in the double top using the fib, the double top target is down here, and we never meet the double top we never meet the double top target, which is down at 148, because the pattern here is a move down to there, move up to there. Now, of course, at the moment, we don't know what market will do for the rest of this new month, but let's say we weren't psychologically ready to short this because of the strong trend that we've been seeing. Are we now psychologically ready to get short? Because prices retrace back up to maybe another failure point. Of course, let's just talk about this double top here. And if you were starting to get your head to get ready to go short, you could have just sold the break of that candlestick low after the rejection candle, the inside candle, stop above the high, and that would have offered you, of course, profit. All right. If you look at that area on a 4-hour chart, it does give you a little bit of a mini retracement in here, but it all depends on what kind of fib level you're looking at to trade at. See that little drop down there? Drops to the candlestick low there and then comes back up. If you're looking for a 79% little rally back up, it doesn't quite get there, but it does offer you a 62% retracement before then starting to move down. All right, now if you can't get in on a lower time frame there, it does offer the higher time frame entry just by the day chart candle break just there, and that of course offers you a nice rundown, very nice rundown on Friday, then reverses all the way back up. Now after the double top, we don't meet the target, but as I was saying before, well, often after the double top, once we've dropped, we can often then rally back up to the 79% level. So if I just get rid of that old fib, and this is the new month. I don't want to discuss too much about the new month because we can review the new month next month. This is all what happened the month before, but just carrying on from the conversation, what happens from the double tops. There's your double top, there's your drop, and we're at the 79% level right now. And Edwin, you asked me, so you're asking me, you mentioned I prefer 78% fib, well, 79% fib. And what in case you have a major support or resistance level, will you still prefer price reaching the fib level? So are you asking me, would I trade the 79% level rather than trading the resistance level? So for example, in this case here, Would I trade the 79% level on the rally? Rather than maybe waiting to see if it comes up to here? Is that your question? I'm going to assume that's the question. You can type in if it's not the question. If it's a double, well, we've already, in this price action scenario, we've already come up to the top and failed and then dropped to change the trend. Once we change the trend, you have to start to anticipate that we're going to maybe just come up to put in a lower top to trade down, and then have another rally to put in another lower top to trade down. All right, so what you're saying is, if the 79% level was, say, here, and I have a clear resistance level ahead of the 79% level, would I wait for the 79 or the resistance? I would probably trade the resistance, because the resistance is a known level that has been proved to be a level where market stops at. The 79% level isn't a proven level. It's just a high probability level using a tool. So I would then go for the actual resistance level. If they're very close together, I may just see whether price would go up to the higher level, being the fib level. All right. But if there's, maybe a 50 pip difference, I would just go for the resistance level. All right. Now, Slav is saying, where would I place my trade here? What, in terms of this current rally up here? If you're just purely looking at the 79% retracement in most recent price action, I've been, when I was the overall euro yen right now, because I'm just watching the chat as I'm trying to draw. As I said yesterday, I've been concerned about Monday's, Friday, Monday's excessive move up, that we might move above this area. So the way I would approach this is, as I said this yesterday, is I would wait for a negative candle to come in at the moment before I make a decision. And I'm just stopping because you're putting more in the chat. So you're talking about this area up here. In the double top. So then, as I was just saying before, you don't know that this is going to be a double top in this scenario until you see a rejection, in my mind. So then I would trade potentially the break of the candle, or if you've got the fib drawn across here thinking that a double top may form, and this is what I say in the double top webinar, is I like to be able to get in. If I've already decided as this is coming up, it could form a double top, I like to be getting in as price action starts to move down. I like to be getting in by the 79% level in a perfect world. All right. And what I would like to generally be doing is maybe dropping down to a 4-hour chart and seeing a drop of some form, a rally of some form, and being able to structure something on a rally where I can get in ahead of the 79% level. Because if you can get short ahead of the 79% level, or at the 79% level, that maximizes your risk to reward. Okay. So even if you don't want to wait for some kind of price structure swing to occur here, let's just go back to the day chart. Is this big blue day up here, it closes up there, right? And you're asking yourself, is this going to go through or not? All right. So let's, this red candle hasn't started yet. It's just opened for the next trading day. And you're asking yourself, is this going to go through that top today, or is it going to start to reverse? and you're looking at price action on a lower time frame and it's not really telling you, like we've had a 4-hour drop and a rally, then what you could simply do is, I've done this before, is I say to myself, well, if price trades back down to the 79% level, I'm just going to assume that it's going to continue down and fail. All right. So you just have an order sitting at the 79% level to take you in if it starts to reverse down from the open up here. And then you put your stop above the high. All right. And that would have worked fine in that scenario. And it's the same deal with this current retracement that we're dealing with. So you can take the same philosophy as well. Because I said last night, I'd like to see a negative candle forming on this retracement rather than just trading at the 79% level. As this has been flying up there Friday come Monday, okay, another way of, just pausing, because if this is flying up, this might just blow straight through that top. So you could wait for a negative candle, or you could just simply wait for negative price action today. We're getting a negative candle today. We tried to trade above the 79% level the day before here. Yesterday we were above. Quite clearly today we're seeing negativity and we're at the 79% level right now. So I could just sell right now at the 79% level, stop above the high, and that maximizes now my risk reward. And I haven't traded until I've started to see some negativity in the area. All right. Now, sometimes price action, like showing here, doesn't come above the 79% level. It simply touches the 79 and then drops. All right. So here we're talking about areas where price action is looking very strong at the time and then starts to hang around a few days. If you start to see it hanging around a few days, then, I would then just look to sell at the 79, stop above the high once I start to see negativity. So this is just starting to show a little bit of negativity there. You don't know what's going to happen until you take the trade and price runs out, but it is just starting to show negativity, but that's into the new month. All right, now I'm a little bit running out of time. I haven't got through as many as I would have liked because lots of questions coming in. I just want to go to the pound. I'll just talk about support and the support. Breaks of resistance becoming support with the trends. We had this very nice move up here on the pound last month in the early part of the month. I want to talk about, this is just purely looking for pullbacks to broken resistance becoming support. There were a couple of very good opportunities last month. So I wanted to show them as examples that you could look at and maybe think about what price has been doing at those levels. Can you see it happening next time? So we have a weekly high here. It is at 126.79. And overall, the weekly trend is up. I'll just get rid of that line because it's going to look terrible on the weekly chart. Is we moved above this weekly high here. All right. Then we pull back. And it's this weekly candle here where it starts to sit on top. But the trend on the weekly chart is up here. We move above, move below a little bit, and then we came back above. And this is where it becomes support on the day chart. And then we move up into a trend. It's just a continue of the weekly trend moving up here. And we might see the same thing starting to occur here to move up long term too. Now, this is where the last month started. See how we come above here? Is this day here that I want to discuss. And I'm pretty sure I put this out at the time, is when we were closing 3 days above that weekly high, I was saying I was watching for a pullback to weekly supports, which is that level there, 126.79. We'll just have a look at it on the 4-hour chart in a moment. As well, we get the exact same thing pretty much happening a few more days later. This level of resistance here, 127.59. We break above on that day. The next day comes straight back down to the broken level of resistance to become support. So over 2 trading days, you get the same thing occurring. That pulls back to now support. We break above that resistance level, it pulls back to support. Let's have a look at that on the 4-hour chart. All right, so that's the pullback to the weekly level just here. All right, there's no kind of retracement fib tool trade setup here. You have to decide that if we pull back to now weekly broken resistance becoming support, you're going to take the trade. All right, and you've got your stop below here. As I've talked before about using a 100 pip stop for a stop, you could be buying at this level, the weekly broken high, 100 pips below. It's either going to work or it's not. And, you know, that moves up. And at the time when I was discussing this potentially moving up last month, I was looking at the target of a move up to this level at 130 because there was an imbalance in here that needed to get potentially filled. All right. At the time, we filled it to about there because there was a high there. So I was looking for this imbalance to get filled and the continuation of this uptrend. So I was looking for price to move up to the 130 level. All right. So looking to trade here on a pullback at 126.79. So there's a good 300 pips move up. So if you're risking 100, using that as a target, there was a good risk reward there, 1 to 3. All right, so back to the 4-hour chart. When we break above the daily level, which is 127.59, there was a fib range here on the 4-hour chart within the trend, pulls back to the 79% level, overlaps with your day support level, drops very quickly, and then reverses very quickly. And then we got that very nice move up. So this whole move up that we saw last month, the best opportunities simply came from pullbacks. We broke above resistance, pulls back to become support. Does it twice over 3 days. All right. All right. So those are the last ones I want to go through. I'll have to go through those pairs with you tomorrow because I'm going to run out of time in a moment. I have to stop and get ready for the next webinar, so I apologize for that. Now, just in reference to this area where we had this very impulsive move up, back to the day chart, as we're into the new month, where are we at? Where's price right now? Where we started to break out and have a very impulsive move up last month. All right, where we potentially had some form of imbalance form. So there's actually an imbalance form in the 4-hour chart here. Where's price come back to over the last few trading days? Last Friday into current price action. Where are we holding at? Same level that became support here to have that explosive move up. All right. Starting to hold and deal there at 127.59. We've actually today traded down to 127.60. Okay. So a level that works very well last month can work very well this month if you're just watching what's going on. So like we say, market looks quite bearish at the moment. Also, Fitch has downgraded the US. That's my reminder to wind up. Yeah, I mean, we are seeing some US dollar strength at the moment, even though, you know, if we're downgrading the US, that should be US dollar weakness. But we've got the job figures on Friday. We'll just have to wait and see what comes around. I mean, at the moment, I've been focusing very much on and looking at the pound dollar as an example. You know, it's been moving up, pulling back, moving up. This is a pullback. Until we, you know, really break this minor low here, this potentially could just be a pullback. To the 62% approximate area for maybe another leg up. That's what I'm looking at the moment, but we'll have to wait and see what the job figures brings. All right, everybody, I'll be doing some more analysis tomorrow at 7. I'm going to move to the next webinar now. So if you are brand new or you want to have a look at the quick start strategy, which is based on the 1-hour chart in line with the day chart, That webinar is coming up at 8. So if you want to come along to that webinar, I will give you the link, or you can go to the webinar page and just register there. There's the link for the next webinar. All right, thanks, Lav. So if you want to come to the next webinar, me and Nathan will be there starting at 8 o'clock. All right, thanks, everybody.